Okay, we are here despite technical difficulties. This was almost worse than yesterday's Core Scientific live stream where we didn't show any of the stream for a good 30 minutes. But we are here to do our Bitcoin mining news roundup. We do this every week on Thursday, publish it Friday morning. So if you're into Bitcoin and Bitcoin mining news, this is the best place to learn about it with the Mining Pod. We're the longest running Bitcoin mining podcast, 3 years tenured, almost at 300 episodes. So thank you for tuning in with us. We are doing a live stream today just for fun. We got Colin Harper, who has just joined the team from Luxor. He's our editor-in-chief at Blockspace. And then, as always, Charlie Spears, co-host and also host of Bitcoin Season 2. Go check out that podcast. For today, we are going to jump into many, many topics. First, our difficulty update, and then we'll go and talk about Iris Energy, their energy report, which was not super great, but also very interesting to learn about how hedging works in the Texas market. Move down south to Paraguay and finish out with some other talks about mining metrics. Okay, let's just jump into it. I think we can give it to you first off, Colin. What kind of metrics are we looking at?
So can we pull up Astronetics? So hash price recently hit an all-time low of $35 per petahash per day, which is absolutely fucking brutal. We've obviously never seen it that low. If you zoom out on the 1 year, you can just see how absolutely battered it's been. And kind of two things happened last week. It was a confluence of Bitcoin's difficulty hitting an all-time high of 90.67 trillion, and also Bitcoin's price tanking down to 50K. So basically, mining margins have never been thinner. and miners who don't. Whoa, watch the coffee there, Chief. Mining margins have never been thinner, and miners who don't have next generation machines are really sweating right now. So yeah, difficulty increased 10.5% last week, and it looks like right now the next adjustment's probably going to be to the downside, because we saw hash rate just absolutely surge. If you look at the 7-day over the last 3 months, you basically have a situation where after the halving, let's look at the yearly. You have a situation where after the halving, Bitcoin's hash rate kind of dumps a little bit, surges just to an all-time high, and then it dumps again to what I think we can probably at this point call the post-halving low, 556 exahashes a day, and then it just absolutely rockets up to like 680. So it's cooling down a little bit. I think that we'll definitely see it stagnate. So far, it seems like curtailment and stuff like that has not really affected it as much as we've seen in the past. So anyway, all that being said, all-time low hash price, not a good place to be.
Not
Max
a good
pain.
place at all.
Max pain.
Yeah, like you said, the estimated next difficulty is down 4.4%. The previous was 10.5% upwards, which combined with that Bitcoin price going down to a low 49K really push hash price down a lot, because like those are the two main inputs, right? Bitcoin price and difficulty. So that's not great, but hopefully it goes up. Charlie, any thoughts on that?
Yeah, that felt like a peak. That felt like a low to me. That was a lot of people got very, very bearish at 50K Bitcoin last week, and you had that 10% difficulty adjustment. That felt like the bottom. So just my subjective experience and people I've talked to, that was like the event to cause a lot of people to, maybe the people who had been barely hanging on, to turn off. So seems to me like we're now gonna recover and just go up.
I hope so. It is going to be interesting to see whether or not we kind of set a floor here for hash price because of just so many various factors. I mean, how much can you really expand in this market? How much power is really available to continue expanding? But we'll see.
Yeah, maybe we transition from this now we transition into the rack space is king meta. That seems to me to be like the next year's like main theme for the mining pod as we talk about it. It's going to be who owns rack space.
That's the thing with Bitcoin mining. Things change very slowly and then all at once. So when you have like these acute pressures with price points, we're going to see the chess pieces move, so to speak. Let's go over to our friends over at the Miner Mag. Go check out their Telegram channel and their newsletter. We're going to pull up from their awesome website. Quote, Bitcoin mining giants deposit $150 million to Bitmain rivals since Q2. This is talking about MicroBT, Auradine, a bunch of other of these retail options, or other options, I should say, for Bitcoin mining ASICs. The piece dives into this a little bit, talking about different Bitcoin mining public companies that have chosen to invest in alternative ASIC manufacturers to Bitmain. So one is Marathon Digital, which has paid $43.6 million into Auradine ASICs, which I have a question on that for Colin in a second. Core Scientific with $10 million to the block. That news was about 2 weeks ago. Block's miner is still forthcoming. It's supposed to be next year. And then Riot has paid almost $500 million to MicroBT with $148 million in the remaining of that commitment. So lots of news there. This is even talking about some of the alternatives from there as well. For the Marathon piece, Colin, is that $43.6 million just future orders, or is this just in their Series A that they invested in?
As far as I can tell from the Miner Mag article, it seems to be the 43.6 million. At Bitcoin 2024, which I was present for, that the rig is going to be extremely competitive. You know, their latest model is like 240 terahashes a second. It was hashing sub 17 joules per terahash. And I talked to a miner there who was really happy with his test unit that he had. So I think the question now is just like, can they actually get the production volume, and can they get enough wafers to basically pull this thing off and produce these rigs at scale? So I'm pretty excited about it. At first, I thought they were maybe a scam, because it's just like there have been so many attempts to break into ASIC manufacturing and they just all fail. But it looks like Auradine could be the real deal. It's just, can they actually like pull off mass production?
When was the last time we saw buy-in from multiple different parties into a domestic ASIC supplier? Have we ever seen that?
The Intel got close.
Yeah.
Right, like Hive and I think Grid, and there was one more bought. Maybe it was Bitfarms. I don't want to misspeak, but I know definitely Hive and Grid bought some of the block scale. It was called
The Buzz Miner.
And then that's what Hive. And then the Hive actually has some of those running.
Yep.
But the Intel aborted that pretty quickly. Auradine would be, if they actually survive and can scale, would be the first major U.S. ASIC manufacturer.
Hilariously, though, a lot of these parts are still sourced overseas. So, like, the tagline is basically the Apple tagline, right?
It's
Designed
like
in California,
Assembled
manufactured in China.
Assembled domestically.
Assembled domestically.
Yeah.
That's just.
I mean, I don't think we would get domestic, like total manufacturing for that until maybe like we have more foundries here. Even then, it's like, do you have the facilities to build everything else out for the rig? So
Definitely.
One last thing to note about this: Riot giving Bitmain the cold shoulder, $412.9 million in sweet immersion technology from MicroBT. Not all immersion, but some air cool. But anyway, I think that's a pretty incredible testament, and to just where we are at this point in the mining market, where one of these big pubcos can kind of tell Bitmain to go pound sand and nearly buy $500 million of one of their largest competitor. So it's good to see. We need to see some more shaking up of the duopoly, though. I'm rooting for Auradine and Block, but I'm not optimistic.
Yeah. No, okay, let's keep moving along. Charlie, we're going to move over to your story, which is Core Scientific shares spiking. We talked about that last night on the live stream we did for their Q2 earnings, which was pretty fun. If you missed that, you can check it out on our YouTube channel. It's also somewhere on our Twitter feed as well. But let's pop it over to you. Colin, do you have that story that you can show?
Yep.
We'll put up on the screen for those watching.
Yeah, so I'm a little unprepared because I'm like not the equities guy, but there was some big CoreWeave news from the HPC AI compute arm of Core Scientific on a big announcement of the extension of a previous deal with CoreWeave, bringing the revenue potential for the miner to more than 6.7 billion. This is just another, like, the leading story of the Bitcoin miner and AI compute hybrid business model. And we saw the Core's share price spike after that. And then we had the Core's earnings call, which we live streamed off the cuff yesterday, which saw an aftermarket immediate dip, but then recovery. So I believe it's actually up since the last time we went live yesterday.
Mm-hmm.
This, as Nick Hansen from Luxor says, they announced a bullish loss, but that was just because they had a net mining loss. But when you incorporate the broader financial picture, you actually had a much more optimistic, was it down payment of debt?
Exactly. So what happened was they had like an $800 million loss, but $700 million of that was warrants being repriced and mark to market, which is actually good for them, because basically these warrants were stock options, in layman's, like, just to boil it down, like, I don't know like the exact mechanism for it, but basically what they are is they were options that were granted during the bankruptcy that like creditors had to take, and they were used to wipe away debt. And Core's stock has gone up since they emerged, so now these warrants are worth more, and so that's good for them because now they can cover more debt with them. So it actually ends up being positive.
Cores
them
continues to
overall.
be a really good, as we said yesterday, Cinderella story of the past year.
Yeah.
We
They're
thought
not-
they were going
yeah.
to be bankrupt.
They're not out of the woods yet, but
Yeah.
it would be, you know, if we're looking back like 5 years from now and they're like a major player in the AI space, that would just be an incredible story.
Yeah.
Yeah, that's one notable thing that Penny Ether pulled out on the live stream yesterday was Adam Sullivan, CEO, of course, saying that they are not really a Bitcoin miner anymore. They are a data center company. They want to be thought that way. And I think for a lot of these Bitcoin mining companies that are so tied to the Bitcoin asset, being seen as a data center company will become more and more attractive because you get those two revenue streams. And then you also are in the eyes of these other companies or these shareholders, more of a data center company. And you might be priced slightly differently, or at least less volatility compared to these Bitcoin mining stocks, which kind of shoot all over the place. Anything on that? We did talk a lot about that yesterday, so we could probably jump over to the next thing, which is this China ban story. If you're ready,
which I know you're very excited to do.
I'm not excited to talk about this because the story pisses me off. That it's something that the author who wrote an op-ed for Bitcoin magazine.
Bitcoin mining was never banned in China.
Spicy
Did y'all
headline.
hear? This never happened.
This is so frustrating.
This
that
never
is-
happened.
Yeah.
But okay, Daniel Batten in here raises some good points. And I just think you need to clarify a few things because like he doesn't say.
Well, we got to go through it first.
Yeah.
What happened?
So
Like,
basically what Daniel Batten is arguing in this article is that like the Chinese government never banned Bitcoin mining. And he has his argument has three pillars. And one of them relies on Cambridge data, which we're not going to pay attention to that because you can't trust Cambridge hash rate distribution data because it's based on IP address logins for pools, not where the actual rigs are. So if you're saying like 22% of the hash rate is in China, I don't believe that. I believe that there's a Chinese miner with rigs somewhere in the U.S. or anywhere else.
It was an
basically
open secret that the Chinese miners just routed
Yeah.
to binding nodes in the EU.
Yeah, 100%. And that's the other thing too is like they have VPNs and all this other shit. So that's one thing that he uses, and I think that's pretty easy to debunk. And I think that's weak. The Chinese legislation piece is one thing that I think is actually worth looking at, and I wish that we had some Chinese Bitcoin miners or Bitcoiners who could actually, maybe translate this for us. But it's basically saying that a policy document, which I don't know if this is for like the CCP writ large, is probably for a province because that's how a lot of things work in China. Basically saying that they're not banning mining outright. They're basically just saying that you can't have new sites. You can't have new equipment come in. And this matches up with my experience, what I know from talking to Chinese miners, where they have said like, there's a lot of mining still going on in the country on a smaller scale that the local governments tolerate, but you can't ship new rigs into the country. If you try to import ASICs, they will get confiscated and you will be penalized. And so anyway, that being said though, I think this kind of matches up with things that I've seen, that it's like obviously certain things are grandfathered in, but I think that's what this piece misses, is the fact that at the end of the day, China is a huge country. It's not unlike the US. There are a lot of there are provinces and there are a lot of local politics. And basically, a lot of these Chinese miners who ended up not leaving got preferential treatment from the local governments. And it's kind of always been that way. Mining has always been a kind of like, a guy in the government, or, a guy like the power authority, and he knows a guy, and you all kind of just get this thing going and you split the profits, and everyone runs away happy because they're not paying anything for power. So it's kind of always been that way. And I think that's one thing that this thing misses, is that, or kind of hits, but misses like the broader point that like it was banned. The government instituted a full scale ban on the provincial level. Each province came out with their own way to handle it and to sweep them away. But that doesn't mean that certain miners didn't survive, which they did. Like there's probably, but the most important thing is that they can't get new ASICs in there unless they really risk it. And so China's hash rate dominance, unless the government completely changes course, is never going to actually get back to where it was, because they can't deploy new hardware.
Yeah.
They're all running like old, like S17s and S19s at this point.
Which is interesting because, go back a few years and all of the hardware was manufactured in China. And then they offshored so they could distribute to other jurisdictions like the US more efficiently. And that is now kind of a limitation or hamstring. So it's a very interesting kind of inversion here.
So that's a
Yeah.
really good point. So I take great issue with this. And when Daniel Batten put this tweet thread out the first time as well, I took issue with it and replied to him, was like, this is horseshit, which we don't curse much on this show. So that should tell you how I feel about it. His sources are terrible for this. No offense. Like it's not enough information. We covered this in the Mining Memo newsletter a few years ago. We had people on the ground who were getting their farms confiscated and raided at the time. And it was on a province by province basis. So his article goes through data that's not very good and does not go along with his conclusions very well. Some bad sourcing from people who were there. And then from the top level approach, he's looking for some sort of like edict from President Xi, he didn't put something like that out. To my knowledge, is all about provincial. It went from like the Congress Party, the centralized party in Beijing, and then like moved to the provinces, and it happened province by province.
Yeah.
Now there's like still a lot of hash rate there, for sure.
Yeah, for sure.
But it's because it's a huge country.
Yeah, it's a huge country, and then usually smaller operations. And I think the province by province thing, sorry if I can just hit on that point one more time, is super important, because that's how it happened in China. Is it was a kind of like a stagger step where each week a new province was coming out with a ban.
Yeah.
And so you can kind of see it. It's like it starts in April and then it escalates in May and then it all falls down in June.
Yeah.
In 2021.
And you see this objectively reflected in the hash rate. I mean, the hash rate did actually fall off by a
Yes.
The
material.
largest difficulty
Yes.
downward adjustment of negative 26%.
Yeah. So down the whole, all in all, was down at least 40%. So
Yeah,
like
one adjustment was 26%.
Yeah.
I thought it was 27. Is it 27?
it was a lot. So like hash rate did have to come offline, and so that was
It
not
clearly
this.
did.
That's not up
Yeah.
for debate. So
No,
it's-
they're just moving to the US because they want to.
Yeah. I mean, look at, and Bitmain's a great example of this, right? So Bitmain might have a lot of their operations, like people in China for like the management, but a lot of their operations are offshore now. They're in Thailand, they're in
Malaysia.
So like the fact that you're coming out and saying, no, like Bitcoin mining is still operational there, but we know the largest Bitcoin mining company had to substantially move its entire infrastructure offshore.
Yeah.
Alone should disprove this thesis. And
Yeah, for sure.
yeah,
I mean, all of Bitmain's manufacturing capacity is in Malaysia currently.
Yeah. So
Um,
did we beat that horse enough? Anything else?
I think it's just important to include some nuance. 'Cause
I think so.
it's a
yeah,
clickable
just-
headline, but we just want to be like, here's some real boots on the ground, actual feedback.
Yeah.
to-
Well, it
flush
is.
things out.
It's a headline that shouldn't be published.
Yeah.
It should be.
It's an op-ed.
You can have something like
Op-eds are ridiculous, though. You
op-eds
can-
can be ridiculous. That's fair, but I think you can have something like Bitcoin mining is not dead in China. There's still 20%.
Yeah, that would have
yeah.
been a more measured headline for sure.
Yeah.
I
Was
agree with
Bitcoin
that.
mining actually banned in China? That would be a
Well,
more acceptable headline.
A little
Yeah.
in the middle. Okay, let's go to this Iris Energy one. Are you guys cool with that one? You guys will do that after.
I'm down. This got some chatter online.
Let's throw it up here, and then we'll go to the buy.
I'm like not a huge fan of the like price to mine Bitcoin metric.
Oh, really?
I mean, this
Let's
could-
go through them. Let me give the table for everyone before we jump into opinions. Iris Energy saw July electricity spike to $61,000 per Bitcoin. This mostly had to do with their Childress site in Texas, where they're on the grid in part of ERCOT, operating in that dynamic
They
market.
just like didn't
where-
have their power hedged.
and they didn't have their power hedged correctly. So we have this tweet thread from Daniel Roberts, who is co-CEO of Iris Energy, and he kind of goes through it. Let me pull that one
Yeah,
up
that would
as
be good.
well, and share this tab. So essentially, they hedged incorrectly. Now these are very tough power markets to operate in. Like this is the NASDAQ or the New York Stock Exchange of energy, where you're having to hire some guy with huge Coke bottle glasses in Dallas, and then they're working through like these different figures for how the energy market's going to trade. From my cursory understanding of this market, it traded a lot differently than last summer. And people thought the summer might be very similar, but it seemed like they were on the wrong side of this hedge and they got blown out on it, and it increased their cost of power by a lot. Within this tweet thread we have from Daniel Roberts, who says, Key drivers of hedge pricing include forward pricing expectations and volatility. West Texas power prices have historically been volatile, particularly during the summer. Normally no issue and often a benefit for us because we automatically monetize this volatility and pocket the spoils through power credits and lower net power costs, which is true. All these Bitcoin miners do that. Then he goes on to say, except the volatility expected by the market in July didn't come within a couple of weeks of executing the hedge. Power prices plummeted to 1/3 of what the market had previously expected. The expected high and volatile spot prices disappeared. And so this increased their cost to mine Bitcoin to about 8 cents per kilowatt hour, which is where you see the hosting market. You don't see these industrial players. Any color on that? And then let's go to that cost to mine Bitcoin metric last. But I want to talk about this first if we can.
My only color is, wow, what a bad time to not be hedged.
Yeah, tough. I mean, they were hedged just like on the wrong side.
Not be
I
hedged
understand.
directly.
Wait, so they basically hedged. They thought prices were going to be super high, so they locked in a higher rate than they ended up actually getting on spot if they had just not hedged.
That's my understanding. The difficulty with this, of course, is this is a very tough market. Like you're hiring experts on this, and we have Blake King who does this for Galaxy Digital on the show quite often. I've seen some stuff from him and some of the other ERCOT power traders talking about this. But, I'm not going to sit here and say I understand how.
No, anytime I've tried to talk about anything related to power markets, Blake is always messaging me. I'm just like, I know I just totally butchered it.
It's really tough to understand these power markets.
Yeah, they're insanely complex.
Yeah.
Yeah, I don't really have any color to add other than that's tough. I would rather just have hash costs than the cost per Bitcoin.
Why don't you like the cost to mine per Bitcoin?
Partially because it's like, I mean, they're just, and I guess you could make the same argument about hash costs, but I think it's a little cleaner. It's like, I don't know what you mean by cost to mine per Bitcoin. Like, what inputs are you actually putting in that? Is that just electricity? Is that electricity and on-site costs? Do you have
SG&A.
do you have SG&A in there? Sometimes miners will like put depreciation in metrics like this, and you probably wouldn't do that for that because then it would look like you're basically broke. But anyway, like you couldn't mine Bitcoin worth shit. But I just would rather have hash costs because you can just put it right up to hash price. And I get it, you can do that with the Bitcoin price too, but I just think in terms of hash price. So I would just rather have the hash cost metric.
I do like the cost to mine per Bitcoin because like I can conceptualize what Bitcoin price is and how much it costs to mine and get that margin and understand on a business level. But yeah, every miner puts different things into their cost side, revenue side, even people mess with that as well.
Yeah.
Cool. Okay. We will go to the next topic, which is talking about Bitcoin miners selling Bitcoin, or are they hodling Bitcoin?
Yeah, so again, this is from a different research outfit named Kaiko, a crypto researcher. We haven't verified this, we haven't dug into it, but it did made the rounds in news. This happens all the time. The TLDR is that the quote total amount of Bitcoin held by miners has dropped to around 1.5 million tokens as of August 3rd, which is down 2.4% from the record amount held in December 2020. That totals about 86 billion, or about 8% of all Bitcoin in circulation. That's the TLDR. And this might be kind of true, but this really is just a good time to just touch on how do we measure what the Bitcoin miner holdings actually are. And we have public mining company disclosures where we can actually understand what those are. Those are publicly disclosed. But then there's the on-chain way of looking at this, where you have a couple different methodologies. The conventional one is hop analysis, where you say we're going to look at the payout from the Coinbase reward going to the mining pool, which is then theoretically distributed to the Bitcoin miners' wallets or clients of those pools. And so that would be, I believe, 2 hops from Coinbase. Those are, each one of those transactions is called a hop. So we basically look at the wallet balances of 2 hops from Coinbase. And if I'm understanding this correctly, that is an all-time low. We have our favorite coin metrics chart up here, which does reflect this.
This is 1 hop though. And
this is 1 hop.
As I understood it, though, 1 hop means 1 hop from the mining pool address.
Which is, so that's a semantics thing.
Yeah. Am I wrong about that though? Because
slightly.
Because 0 hop is mining pool address.
0 hop is mining pool address.
So as a 1 hop would be payouts.
Yep.
Okay, so the coin metrics data then would reflect what that report from Keiko was saying that Bloomberg reported on. It's been at the lowest it's been in years. I mean, all the way back to like almost 2012.
Yeah. I think the other point to make is how meaningful is this metric?
Not very.
And it's not very, I don't think it's very
Because they could
meaningful.
just be like holding it in an exchange address and you don't know whether or not they're actually selling. That's the one thing about this is like this assumes that once it's like sent to an exchange, then it's liquidated, right? Because that's how it gets taken out of circulation. So I think that's not very useful because it's like you don't know that they're actually liquidating this. They're probably just holding it there.
Also, are minor holdings, if we were able to see them, is that actually a reliable indicator of any other metric? That's up for debate too, I think.
Yeah, I don't think so. Like with regards to what, like Bitcoin price or anything?
Bitcoin price, cyclicality, sell pressure. This again does feed into the are miners selling, and is that why Bitcoin is going down?
I mean, minor holdings are such a small sliver of the overall liquidity pie at this point. I don't think that it does anything.
Well, that's the problem I have with all these stories, right? And we saw this yesterday with a lot of the headlines from the Core Scientific news, where they had $830 million in net revenue or net cash. What was it? What was net something? I don't know why I'm blanking on that right now.
I don't remember.
Early morning had. But anyways, the headline ran like negative 830 million for Core Scientific. The stock dropped, but you look into it more and you'll know that like.
Well, yeah, we talked about
sense, right?
Well, we talked about that earlier, yeah, because it's the warrants.
Yeah. So for this story, it's very similar in the sense that like if you dig in a little bit more, you realize like this doesn't matter because the metrics don't exactly say what the headlines are saying.
Yeah.
So this is a good reminder to always like look a little bit deeper. These sort of miners are selling or dumping don't matter.
Yeah. To me, like what this also just kind of shows is like, what this shows to me over time is the industrialization and kind of commoditization of Bitcoin mining. Because it's like, of course, like people, like all of these miners back then, like they were just holding all of their shit.
That's them trying to figure out what to do.
Yeah, exactly. Yeah. And like they weren't like cashing out in exchanges. They weren't a publicly traded company that had to like have like cash flows and appease shareholders. And then at this point, we're down at the other end of the tail here. We're in 2024 and Bitcoin mining is increasingly financialized and it's been increasingly integrated with all of these traditional financial institutions. Custodial holdings or custodial solutions are at, the most complex they've ever been. None of these big miners want to hold their own keys. This makes sense to me. I don't think that this is just kind of a trend of, how institutionalized and custodial Bitcoin has become in a way.
It's interesting because I see the chart, which is, yes, miner holdings according to this metric are declining, but I see it smoothening, which is actually to me a very good sign, as you say, commoditization of the industry. Volatility in miner holdings to me is a sign of old Bitcoin mining strategies and trying to figure out how to play and interact with this market.
Yeah.
Okay. Let's go to the last story here.
Paraguay
powered chief, no cryptocurrency mining company has left yet. So we've seen an uptick in Latin America mining. I'd say over the last year, there was a big movement after the China ban as well. But I'd say last year we've seen a lot of interest from Bitfarms, Hive, and a few other companies moving into these power markets that they're trying to take advantage of clean energy and say somewhat available energy. The issue with South America countries has always been the political regimes can be somewhat unstable. I think for Paraguay, that has been a big issue is like, are you going to get kicked out or not? Recently, we did see Hive Energy just sign a big check to get a 100 megawatt site in Paraguay that they're very excited about. The Hive team actually met with the president of Paraguay to get that done. This story kind of talks about, hey, there's no Bitcoin miners leaving. And there's been local reports about that. I actually haven't seen any of those local reports, so this was kind of.
I would like to corroborate this with people, with Bitcoin miners in Paraguay, because as far as I can tell, it's like they've been cracking down on illegal mines. But this article says, they've got like basically 400 megawatts under or what is it? It is they've got 400 megawatts of applications in the pipeline, 72 licensed crypto miners in Paraguay, and I think it's like something like 370 odd megawatts currently being used.
Yeah.
So
I think just kind of goes to the point that some of these countries are interested in Bitcoin mining coming to their nation states for various reasons, especially if you're a publicly listed Bitcoin miner and you're able to bring in those jobs, bring in all the tariff revenue you get. That's a big deal for these countries. So I wouldn't be shocked to see more of these countries trying to push to get Bitcoin miners to show up. And South America does seem very favorable for power
Yeah.
rates. Just depending on the location. Ethiopia, East Africa has been the other one we've talked about.
Yeah. Well, Paraguay is perfect because the Itaipu Dam is like the second largest dam in the world behind Three Gorges. It's just whether or not the government's going to let it happen. They've tried to pass some bills in the past that were favorable to Bitcoin miners, and then that ended up flipping to ones that were unfavorable. I think they've put recently like levied a new tax on their power. So
yeah,
and which is crazy because Paraguay is a nation of like 5 million, 6 million people. It's like the population size of Tennessee.
It's very small.
And they have like the second largest dam in the world, and most of that energy goes to Brazil. So there's a lot of politics at play and how this is going to end up being used. But so it's like it's curious. It'll be curious to see like how much more room there is to grow down there.
Definitely.
Yeah, I mean, the other core part of this is that it's in response to, well, the 15% additional tax to cryptocurrency miners did not, according to the report, cause miners to leave. And I look at that and I look at other historical events where governments have imposed taxes specifically to that industry. And while 15% is significant and does affect miner margin, I don't know if like that additional like raw cost of power would dramatically affect whether people who had already began to deploy and be energized pull out or not.
Yeah.
So, I mean, we see that type of price fluctuation. In my own home state of Oklahoma, we saw power rates on grid skyrocket like 50 to 80%, and now are back down. So, like, we expect power rates. So, I think I would expect this just to be baked into minor cost of production down in Paraguay.
Gotcha. Nat gas getting cheap again. Okay, that will do it for us on the mining pod this week. If you enjoyed the show, give us a like on our Twitter or give us a subscribe there. Also, go to our YouTube channel, subscribe there as well. And then we're on all the RSS places. So if you are on Spotify or iTunes, or you want to go and listen on Fountain, we're even there. Go check us out. This is the news roundup portion. We do this every week, also on CoinDesk. So Charlie, Colin, see you guys later.
See you.
Have a beautiful week, y'all.